What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to cover some other notable names on the market, such as Tesla, Apple, Amazon, AMD, and NVDA. Let's go ahead and get started by first talking about SPY, and we're going to do so on the short-term and the long-term candles. But for now, let's go ahead and focus on the longer-term time frame, here starting with the weekly time frame. We're talking about the weekly because last week SPY closed above a very specific level that helped it move back and reaffirm its bullish territory. But before we jump into that critical level, let's talk about some things that happened last week and some things that are happening this week that could potentially boost us higher. So last week, the Federal Reserve, first of all, started off by saying that they are willing to lower interest rates by 75 basis points in 2024. This is the first time the Federal Reserve has brought up lowering interest rates, and this helped boost markets significantly because lower interest rates are very good for stocks, especially for growth. A lot of stocks rely on debt. A lot of stocks rely on borrowing money in order to grow the business and to hire more people on. And so lower interest rates makes it cheaper to lower money. For specific, it makes it cheaper to borrow money rather. So more specifically, we saw IWM make the most gains last week. It moved towards its 2023 highs within just a few days. This happened specifically after the Federal Reserve spoke. IWM is the Russell 2000, and this is the small cap ETF. So small caps, penny stocks, a lot of stocks under $50, for example, are going to trade within this index. So when this index is moving higher, it means that people are getting more aggressive about the market. First, they put their money in safe companies that exist within the S&P 500, for example, companies within the Dow. However, the last index that starts receiving money is going to be the higher risk index, which is now IWM. So general trend is becoming very bullish on the market. People's sentiment is turning very positive. We'll have more reports on that this week. Another major thing that happened last week is the CPI report came out, and it came in a little bit lower than the previous month, but it is getting very close to that 2% mark that the Federal Reserve has been chasing for so long. If the CPI report comes below 2% next month, then we are likely going to continue our rally. Another major thing that's happening this week is going to be the PCE report. The PCE report is also an inflation report. This is the Federal Reserve's preferred inflation report, so they'll be watching this closely. One thing we do like about this report is that it is reading right at 3% as of October. And so there's a very good chance that we start going into that 2% mark this week. So markets will be very excited to see this number start with a 2. Even if it comes in at 2.9%, it will be seen as good news, especially in this environment. Now, this week is also the week ahead of Christmas. There is rumored to be a Santa rally. We will argue that the Santa rally has already started. It has been going for quite a while now. This week, we may see markets slow down rather than rally higher because a week ahead of a holiday is going to see slower volume, lower volume. So be careful if you are trading this week's contracts with the hopes that the markets will break out. You would want to date out your contracts, especially if you're taking option contracts through January, just to give yourself enough breathing room on all these trades. And that applies for all the stocks that we're going to go over today. Retail sales data also came out last week, and it came in at a positive 0.3. This is great news because last month it came in at negative 0.2. So remember, retail sales are the backbone of the US economy, and so it's very important that consumers are happy about spending, especially during a holiday season, because fourth quarter is usually the biggest for most companies. This week, we have the consumer sentiment report that is expected, and consumer sentiment has been dropping for 4 months in a row. However, gas prices have come down recently, so that is a big thing to note. As gas prices come down, people become happier generally about the environment that they're in because they can spend things on they can spend their money on other things. And another thing is that delivery all around costs come down when gas prices come down, and so that's going to help with the inflation case. So now that we've talked about all the economic background of our video, let's go ahead and jump into the charts and talk about what's happening on the technical analysis. We're going to start off by talking about SPY on the weekly candles, and that's because last week we saw SPY close above the 460 mark, so it reinforced that breakout. This was a point that got rejected at, and it was sent off to sell off for the next few months, and so we sold off all the way from July through October when we got rejected at 460 last time. And so this was a big test, and we can see that we broke right through it. It was accompanied with strong volume, and the RSI's histograms are moving into positive territory. I'm sorry, the MACD's histogram here. So overall, pointing to a very bullish month so far. What we want to focus on next as we head on to the next 2 weeks, and we will be doing a video between now and then, is where will the December overall monthly candle close. So right now it is projected to close above that 460 mark. This week's definitely closed above that 460 mark, but we want to see the overall month's candle close above that level. If it does, then there's going to be a very good chance that we're going to break out into all-time highs on SPY going through January. So now let's talk about SPY on the shorter term candles here and talk about what we can expect on the hourly time frame this week. So coming into this week, the first resistance in focus is going to be the 473.73. That is simply where we got rejected last week. That was the highest point we made before we got rejected. So that is a significant resistance in our way. SPY may attempt a breakout early on in the week for that 73.73 mark, but be careful because that breakout, if it fails, that means we can potentially sell off for the rest of the week or just consolidate, and that would just be the options market or option market makers kind of draining your premiums if you don't date your contracts long enough. We are bullish, but if we consolidate this week, we wouldn't be surprised. If we get above 473.73 and stay above that level, then we have a target around 476.30, and above that level, we're moving towards all-time highs. To the downside, even if we break below the 467 and 464 mark, we would still not be considered bearish. It would still be considered a pullback or profit taking maybe ahead of the holidays. But if we move below 460, then buyers are not going to be too happy because you can see this was a point which we consolidated for a few weeks before we finally broke above it. And so if we move back below that point, people are likely going to want to take profits. The next stock on our watch list is going to be Tesla. Now, Tesla finally gained a little bit of traction last week. This is more traction than we've seen in most recent rallies from Tesla, but nonetheless, Tesla rallies are never fully trusted, so you always want to give yourself a few weeks for any Tesla contracts that you take in order to let it breathe and pull back as needed. We are bullish on Tesla overall, and here are some levels to focus on. Before we jump into these levels, let's talk about it on the weekly chart though. This is a very, very good looking chart because you can see that the overall weekly candle closed above all the resistance it's seen in recent history. Strong volume, RSI and MACD are healthy, and so we are seeing it starting to trend up, potentially breaking out exactly how SPY broke out from this trend. It's a very similar trend to what Tesla is doing right now. It just hasn't gotten that go yet, but once it does break above our levels that we'll show you shortly, we do expect it to start moving towards 300 within 2024. So Tesla's first resistance and focus from here is going to be 257.60. We are strongly bullish as long as it remains above 245, and by that we mean on the short-term charts. This is just for this week. The overall chart is obviously bullish, so even if it pulls back below 245, we wouldn't necessarily change our bullish position on Tesla. But if it breaks below 245, it's completely fine. Below 226 is where it would start getting questionable because this was a consolidation range that it has been building for quite some time, so we expect the breakout to be very strong. The longer the time frame that it's been consolidating and forming this breakout on, the stronger the breakout is going to be to follow. The next stock on our watch list is going to be Apple, which just touched all-time highs. So people are very excited, obviously, because many people are investors of Apple. Here are some levels to focus on for Apple. First, let's talk about it on the weekly chart, where we can already point out that Apple is displaying a negative divergence. So We do like the fact that it's all-time highs. However, we have to point out that there is weakness on the chart. The RSI is called the Relative Strength Index for a reason. It measures strength, and right now the weekly candle is not showing a lot of strength. However, on the daily candle, so if we zoom in a little bit closer, the RSI is closer to that 70 mark, so there's definitely strength on the shorter term time frames. Here are some levels to focus on for Apple. We are strongly bullish above the 196.20. The resistance in focus coming into this week is going to be 199.62, which is all-time highs. Above that, there is virtually no resistance. We usually get our price targets from previous resistance points, and if there's no resistance above all-time highs, obviously, then we don't really have a resistance point to focus on in terms of the next price target. So we will be updating Apple as it develops. To the downside, below 196.20, Apple does not have much support. You can see this move was pretty vertical, and so Apple can free fall towards 191 to 192 if it breaks below 196.20. We will still be bullish unless Apple breaks below 187.50. That's when we may turn our sentiment towards a little bit of a bearish stance. The next stock on our watch list is going to be Amazon, which struggled to get above 150 this week. This entire week, traders and members in our group were waiting for Amazon to get to that 150 plus level. It got to it end of week, but it didn't really make a significant breakout. We are still impressed by the fact that Amazon is holding this strong bullish signal. It has not really flinched. Even on its strong pullback, it got bought right back up, so buyers are definitely trying to break this one out. Here are some levels to focus on for Amazon. Above 151.40, we have that resistance set for a breakout towards 156 to 157. To the downside, Amazon has a support at 145.50, but even if it breaks that, we would still be pretty bullish on it. If it breaks below 141.50, that's when we would change our stance to a bearish one, and we would be taking puts on it towards a 138.90. No matter what in this market, we are not swinging puts. If we do happen to play puts during the day or short a stock during the day, it's a very quick short. We are not taking puts in this market. This is a very bullish market. You don't want to bet against the trend. As it goes, the saying is the trend is your friend. The next stock on our watch list is going to be AMD. AMD had a massive breakout last week. We have been holding this stock since about 107, since we saw it forming this channel down pattern, and we are currently up nearly 40% on this position. So a very, very exciting move on AMD. Just reached its 2023 highs, and here are some levels to focus on for AMD. If you guys do want to get into our trades and see how we trade and get specific entry and exit points, you can always join our group. We will leave a link in the description. We are having a holiday special if you want to get in. For AMD in specific, your resistance is going to be 141.82. Above 141.82, the bullish price target is going to be 152.50. Keep in mind, this is a very, very aggressive price target. It's not impossible for it to hit it, but it's pretty aggressive, so it's unlikely to happen this week. You want to give yourself enough time and on your position and on your calls if you're planning on taking them. We will be updating AMD in our coming videos as well. To the downside, we have a support at 131.90. Below that support, the next support is 126.70. That's when we would get a little questionable about this breakout, because that means the breakout failed. This was the consolidation point. This is breakout point. So above this level, we want it to stay. If it breaks below this breakout point, then buyers are not going to be too happy and they may sell it off towards 116. Again, these are very aggressive upside and downside targets, so keep that in mind. The next and final stock on our watch list is going to be NVDA. NVDA has been a little quiet, but if you've been watching our videos over the last few weeks, we have been talking since NVIDIA's earnings about the fact that we don't expect NVIDIA to move until the second half of December, which we are just entering, and into January. The reason why is because if you don't know, Friday or last Friday was Triple Witching Friday, which was OPEX Friday, which was when the monthly options expire. Many people had calls dated for that Friday expiry on NVIDIA, and so as you can imagine, market makers knew that many retail traders have been holding these calls, and so Specifically for that reason, they'll flatline the stock only to crush all those premiums, and then we see the stock starting to gain traction. Hence why we saw it push on Friday. So coming into the next 30 days or the 45 next days, we do expect NVIDIA to begin rallying and catching up to the market's all-time highs. Keep in mind, NVIDIA has been one of the strongest leaders in the market, so it's not a surprise that it's consolidating while everything else catches up. For NVIDIA's level specifically, here are some levels to focus on. We are strongly bullish above 173.95, but even if it breaks below that point and comes down towards 449, we would still be looking for entry. We would actually love an entry around 449 on NVIDIA because that would be catching probably the last pullback before the strong takeoff. We do expect NVIDIA to rally very strongly because it has been building this base for a very, very long time. It's been building it since May, ever since it had that earnings gap up. So we do expect its next gap up to be very strong. Above 495, we expect it to move towards its all-time highs. And above 509.17, we actually expect NVIDIA to move very quickly towards 600. So we will be taking NVIDIA calls in our group on when the time is right. If you do want to join us on those calls, make sure you join us via the link in the description. Thank you guys so much for checking in, and good luck, and have a great pre-holiday week.